Market is still hanging in there. Today, by the way, is um, they're going to rebalance a lot of the Russell 2000s and the funds. Okay, so let's start with the usuals. A couple of the stocks that I talked about last week did really, really well. Hopefully, you guys did make money. This is the triple Qs. Triple Qs are the um, Nasdaq 100, where all the Magnificent Seven sleeps. So what has happened, right? So we're still in a solid uptrend. I don't see anything here yet, except that today we retested the old high right here on the upper right hand side of my screen. We retested the old high, and we're reversing. So the euphoria that Trump won and he's going to be the next president kind of went away. Supposedly, a lot of people think that Republicans are good for the market. Actually, it's wrong. Democrats are actually as good or better than the Republicans. So there is no, our market thought, okay, if Trump wins, there are going to be more tax cuts. Yeah, but what's going to happen to the deficit? I mean, we can talk about that until I'm blue in the face. So today we're working on a reversal day. It's called key reversal day. Open higher and close lower. If the market closes lower, it's only 11 almost. So we have a couple hours to go, but they're going to rebalance a lot of the indexes today. So you may have a lot of volume at the end doing nothing, to be perfectly honest with you all. I am definitely looking to short the market. I really am. And because, we talked about the relative strength index last week. Do you guys see what's happening here? The relative strength was about 80 on the index. So what happened is that this was at the old high. Then market kind of had a little bit of a correction, maybe like 3% correction. Relative strength went down to the 40. Let's see, it went down to about 65, 66, and then market retested the high, and relative strength is never at the high. This is something I call, and you guys need to pay attention to, which is called bearish divergence, right? It has happened right here. You guys, I'm circling my cursor, but at the moment, nothing to panic yet. All short-term. This is the short-term uptrend. Markets above is 20-day EMA. I'm highlighting it's 50-day EMA. It's really far, and it's way away from its 200-day EMA. This is the medium-term uptrend, and this is the long-term uptrend, which you can go back and draw these lines. You should be able to by now, going back a few years. And if I pull back to 2 years, right, and 3 years, I mean, if this is not an uptrend, I don't know what is. And this is where the super long uptrend comes into play. I mean, that's at okay, index is at 480. That the super long uptrend is about 310. So you guys see how much air there is if there is going to be a pullback. And there was one when they were raising the rates, like I'm circling it here. There was a massive drawdown, actually. The index, triple Qs, went from 400 down to 250. That's a massive turn, right? Is it going to happen this time? I don't know. But when it starts breaking, things are going to get interesting as far as I'm concerned. So that's that. That's the triple Qs. I'll show a couple of stocks I'm watching that are actually on the verge of breaking out, and one of them did break out. Let me show you guys the S&P 500. S&P 500, pretty much the same look as the triple Qs. Uptrend is intact. Above is 20 EMA, 50 EMA, 200 EMA. Medium term uptrend is intact. Everything is intact. I mean, there is nothing to panic yet. But again, that's also working on a key reversal day today. And then the interest rates, right? So today, we talked about this multiple times. This is the TLT that I watch. This is the interest inverse 20-year note index. We had a channel that was in existence for months, and then it broke out. So right here, when it breaks out, that means interest rates are going down now. It broke out, pulled back to where it broke out of, and then went up there. Now, there is a long-term downtrend that dates back to the zero interest rate days, and that's where it comes from, going back to 5 years. So once in a while, you guys need to pull back. That's when interest rates were zero. That's when 2020, when obviously Fed was pumping like crazy. And that's the long-term uptrend. But if I may ask you to pay attention to, what happened is that the 200-day moving average, which is the light blue line that I'm highlighting, It kind of stalled there, and today it's having a big leg down. Big leg down meaning rates are kind of going higher today. So that could be another interesting thing to watch and time the market pullback. So that's the TLT. So let's look at everybody's favorite NVIDIA. Same thing is happening in NVIDIA. I talked about this last week with you all. There was right here where I'm circling my cursor. All my support lines and the resistance lines now are drawn. So the stock hit 140 on the nose and then had a massive key reversal there and massive volume. And we talked about this key reversal days. After key reversal days, you expect downside action, which it took place the next 2 days. Then you will expect a snapback of about 50% of that correction and then a rollover. And that's happening now. And the next support line on NVIDIA is going to be the 20-day EMA, which is highlighted now. Then the 50-day EMA, which is highlighted now, which is about right at 110. So stock is 124. Now I can draw comfortably. I can draw my so you guys can see my resistance lines. The resistance line is at the old high, which is at 140 and change. So that line will stay there. So the next possible potential support is at 117 on NVIDIA. It's at 124 now. If it takes that out, the next line is going to coincide with the 50-day average, about 107 to 110. So stock is in an uptrend. There is no ifs and buts about it. There is there's this also trend line that's going through. I mean, that's the way down. That's at 100. Okay. So stock is fine. Although it's kind of toppy, it feels very heavy to me. Let's look at Tesla. Tesla is finally turning. Okay. And you remember we talked about Tesla every week almost, right? So here's my support line on Tesla. Actually, this is the day that earnings were announced, this big gap up day right here. And then it went all the way up to resistance, which was drawn already. And then it pulled back. Then it tried to go again. Then it pulled back. And here's clear support now at about 170, 168 to 170. Then we all know what pattern this is. This is it's a pennant. And this week, Tesla, first time, it kind of is trying to break out. And the other thing that you guys need to pay attention to, and if you pay attention to your technical analysis tools, there is a head and shoulders pattern developing here. This is the head right here. I'm circling. This is the left shoulder, big old left shoulder. And this is the right shoulder with the neckline being right at this resistance level, which it actually broke through today, but it's red now because market's kind of turning. And Tesla follows the market, but I think on pullbacks now, it's above its 200. It kind of stalled at the 200-day, which is expected, but it's above. First time, it's clearly above its 20 EMA, which is turning up. It's clearly above its 50 EMA, which is turning up. So if Tesla were to pull back to 190, I'll be buyer of options. I'll probably go out long this time, maybe September, October, and go way out of the money. Like I'll go probably to 250 levels. Because that's going to be the most bang for your buck, because I want to hold those options for a while. I want to buy myself some time. The RSI is doing well. It broke out. So Tesla is turning bullish, people. I mean, there is some catalyst coming up on Tesla again. August 8th, they're going to announce the robo-taxi. We'll see what that's all about. Today it was up again over 192 or 93. And then now it's kind of pulling back with the market, which is expected, which takes a breather. Perfectly normal. Another one that I've been watching that's kind of still going sideways, and this is going to be turning into a very interesting chart. This is the NVIDIA competitor, not 100% competitor, but to a point, is AMD. So AMD had a massive run. Uptrend was intact, and it was broken. Stock hit about 230-ish, and then pulled back all the way down to 150. So when things pull back, people. So, we're not joking. Those are multiple points. But now it's been going sideways for, let's see, since May, early June, actually. It's been going sideways for weeks now, right? This almost looks like kind of the Tesla look. And these are the setups that I really, really like. So the more it goes sideways, the more violent the move is going to be up or down on the breakout. Okay, so you all have to understand that. Now, when things go sideways, there is a reason for it. The reason for it is it comes after a major up move or a down move for for consolidation reasons, just like it's happening in Bitcoin now. And I'm watching, like today, markets reversing and AMD is up 3 points. So I am very closely watching AMD. It had a little nice spike on high volume a few days ago, and then it went sideways. And then now it's having another spike on a down day. I'm bullish on an AMD. I think it's above its 200-day. It's kind of crisscrossing the 50 and the 20 EMA, just like it did here. If you guys look, where my cursor is circling now to the left side of the screen, the longer it goes sideways, just like it did for almost few months here back in 2022, the larger the move is going to be. And then when the stock finally broke out above its 50, above its 20, above its 200, the stock broke out about 101, and in about, so this is November of 2023. By March of 2024, we're talking 230, right? That's a double. If you can't make money on this uptrend, and I'm not telling you to buy and hold it all the way to the top because nobody knows where the top is, but you got to trade with the trend. And there was a clear uptrend on any pullback. You could have bought AMD and made yourself a bundle of money. Or if you're a buy and hold type, buy and hold, swing trader type, right? Or position trader type, buy and hold it, make your 100% in 5 months. Who's going to get you that kind of money, right? So those are the few that I'm watching. And obviously Amazon's and everything else are doing fine. Two stocks I want to talk about. It was in my universe. Actually, I want to talk about one other thing with you guys. This is what I want to talk to you guys about. So I'm going to put the S&P 500 up. There is a trade here that I am definitely going to get involved in, right? So S&P 500 is the largest 500 companies in the US, and S&P 500 has outperformed every other index, but there are other indexes. One is called the Russell 2000. It comprises of 2,000 stocks. S&P 500 comprises of 500 stocks. Now, this is the S&P 500 going back a year. So I'm going to leave this chart as it is, and I'm going to click on another chart, and you guys will see the difference, right? And what the Russell 2000 has been doing. Because if the Fed starts cutting rates, it is very, very, very good for smaller companies. Not as much for the larger companies. Larger companies actually benefit from higher rates for the fact that they have hundreds of billions of dollars on their balance sheets as cash, and they can invest that in treasury bills and T-notes and actually make money on interest. So this is the symbol, the index symbol for that is IWM, right? So, okay, so let's think about this. What has the Russell 2000 been doing? Nothing, literally nothing, while the S&P 500 is going through the roof, right? So I'm going to crisscross between the two charts. This is the S&P 500. This is the Russell 2000. Do you guys see the difference? They both bottomed at the same time. So they both bottomed right here where my cursor is at. Since then, S&P 500 has gone from 410 to 550. And we're talking, this is 2022. We're talking, 2023. In November 2023 to June now of 2024, S&P 500 from 410 to 550, let's say, that's 140 points. That's 30% from the bottom. Okay, now let's look at the Russell 2000. Well, Russell 2000 bottomed exactly about the same time because all indexes bottom after a swoon, right? So Russell 2000 was about 160 when it bottomed. Then it followed the S&P 500 on a really, really sharp manner until early 2024, right? And since then, literally in January of 2024, Russell 2000 was 200-ish, 204, 203. Guess what? Now we are in June, 6 months, this thing has gone sideways. Yes, it has gone up and down, zigzag, but it's still at the same place, while the S&P 500 since January, and I'm going to put the other one back again, since January, which is right here, was about 470. Now it's 550. It's gone up another 20%. So there is this massive gap now between the top 500 companies in the US and then the 2,000 stocks that is in the Russell 2000, right? So I'm pretty sure there is going to be a very, very good trade when the Fed starts cutting the rates. And how's that going to materialize? As I said, it's going sideways, correct? And what happens? The longer it goes sideways, could it break down? Absolutely, because if an S&P 500 tanks, is the Russell going to go and desert S&P 500 and go up? No, it's going to go down as well. But what I'm thinking is S&P 500 is going to go down a little bit or go sideways. And when the Fed starts cutting rates, IWM, so that's the index, is going to break out and have a massive run. Okay, so the ratio between the S&P 500 and IWM at the moment should not be here. It's almost like 2.5 to 1 now. And I'm pulling it back now 3 years for you guys to see where it's been in the past. And this is 5 years, right? I mean, if you bought the as you know, Russell 2000 in literally 2021, you're still underwater. If you bought the S&P 500 in 2021, and that's that, if you bought it, let's say at the, right about here, which is the same spot, it was at 400, now it's at 550. So you guys can see the outperformance of the S&P 500 or the Russell over the Russell 2000. So IWM, please take a note, is something. Now my trade is going to be short the S&P 500, long the IWM. How do I do that? I just short the indexes. These are ETFs. I short the S&P 500 and buy the IWM. If both go down, I'm betting that the IWM is going to go down a lot less than S&P 500. And if the Fed cuts rates, both keep going up, I'm betting that the IWM going forward from here is going to outperform the S&P 500. So it's kind of a hedge position as well. But, I like it. I like this trade. So if you guys are interested, want to learn more about it, start reading. Two stocks actually I want to talk to you guys about. It was in my watch list for you guys. I sure hope you guys did something with it, because I did. Remember I was talking about Chewy? That's one of the stocks, right? Now the last 2 days it's an absolute ridiculousness, but before then it had broken out here, right? And that's when I told you guys to get on it. It was like about $20. Go watch the old power hours. You guys clearly hear me saying that. This was one of the stocks I had added. Then what happened? Once it broke out on high volume, which was on earnings day, it went sideways. Then it took off again. Yesterday, for one reason or another, Roaring Kitty, who is the GameStop's guru, I guess, posted a dog picture on Twitter, and Chewy went from 30 to 40 in like an hour. And then now it's back to 27. Right? Ridiculous, to be honest with you, when these things are happening. But it was on an uptrend. You should have made money on this move right here. Another one is Carvana. You guys will, there's no ifs and buts about it. I said I like Carvana at 100. Because I went and rewatched the Power Hour from 2 or 3 weeks ago. Stock had broken out, pulled back to the 50-day average, which is my first strong buy point. It touched it twice from 100 within a week and a half. It almost hit 140. You can trade options. You can trade the stock. You can do whatever you want. It's the same pattern as here. That was another one, success story. What else was on my list? Well, GameStop is GameStop. We'll not even want to talk about it. But few stocks that are breaking out. Not everything is bad because markets reversing or doing what. You just got to find stocks that are, outperforming, right? So here's another one that I'm really, really interested in now. It's going to go through a 10-for-1 split. It's called Avago, which is Broadcom. When they announced the earnings and the split, this is looking exactly like Carvana, actually. It went from 1,500 to 1,850, pull back all the way to the 20 EMA, 50 EMA is here. I think this is definitely worth looking into. Avago. Another one is let's see, Qualcomm. Qualcomm, again, first pullback to the 50. It's one of the stronger signals that you guys can do. We hit 230 after the earnings, pull back all the way down to 200. 195. Up again today on a day that it's not. Market's trying to reverse, actually. So, my watch list is on the community page. I'm also going to post my Robinhood account on the community page. Another stock I added to my watch list is Zillow Group, right? Again, I've watched these things, right, very closely. So Zillow Group had resistance. Earnings came out. Just looks, those the Carvana type of setups, right? After a long downtrend, if earnings are good, stock gaps up. Now it's kind of going sideways. Well, it's a low risk trade for me here, right? If I buy Zillow here at 46, I mean, my stop point is going to be right about 8% to 9% at 43 level. If it takes that out, I'm out. See you later. But the upside from here, from 46, I mean, the stock was as high as 61. It's up 3 to 1, 4 to 1 upside to downside ratio. So I'm going to add this to my list. The other ones, let's see. They're all. I mean, they're all going to be on the list, so you guys can go take it. Oh, MicroStrategy. How can I not talk about MicroStrategy? MicroStrategy is the Bitcoin surrogate with Michael Saylor. He issued another $700 billion and bought 12,000 more Bitcoin. So now MicroStrategy owns 227,000 Bitcoin. They're borrowing money and buying Bitcoin, okay? And the money is being lent to them hand over fist. Now, what is happening to this? It was a massive uptrend from 500 to close to 2,000 on the stock in a very short period of time. And that's because Bitcoin went from 30 to 70,000, right? So this thing follows Bitcoin. However, you guys must understand, as a surrogate, you guys got to be careful with this. So they own 227,000 Bitcoin. At 60,000, that's worth about $16 billion. So they have 16 billion in Bitcoin in their treasury, okay? But there is 15 million shares outstanding. And the stock is 1,400. So that's about $22 billion. So there is about a premium of 6 billion that you're paying. Should you just go buy the ETF, right? There's a double ETF, or should you buy the regular Fidelity or BlackRock Bitcoin ETF? If you don't want to pay the premium or the leverage you don't want to deal with, then do that. But if you want leverage, definitely look at MicroStrategy. And if you want leverage, also look at this ETF. This ETF is, the symbol is BITX. It's 2x Bitcoin strategy ETF, meaning this will outperform the Bitcoin ETF, Bitcoin's price by 2 times on a daily basis, right? So we know what happened to Bitcoin. It hit 72,000, now it's down to about 60. Well, this thing went from 50 to 30, right? But when Bitcoin went from 30,000 to 70,000, what did this do? It went from 20 to 60, right? So Bitcoin doubled, but this tripled. So that's why it's called the 2x. So it's more leverage. On the way down, if you're wrong, you're going to be wrong. On the way up, if you're right, you're going to be more right. So it's called BITX, and it trades quite a bit of volume. So don't be shy. And here's the 200-day average on it, which I think could be support. And I mean, look, if Bitcoin breaks 58,000, I think it's going to crack to 50. And so I'm giving you all your choices. Other things to talk about. I got stopped out of Alibaba. I said that last week. But I always update my list. This is one of my favorite stocks. It was Pinduoduo. This is Timu's owner, or Timu, whatever you guys want to say. Stock did fantastically well for me after 2 flags. I traded it, and now it's broke the 50-day average. It's under the 20 EMA. I mean, his next level of support is going to be right here at 125. Stock is 133. At 125, I'll give it a crack at the 200 EMA, maybe to a return to 140 with options. But you got to rotate your stocks just like the market does. When it's in favor, you got to be all over it. When it's out of favor, wait for your spots.